Okay, this is your daily price action outlook for January the 3rd, 2013. And we're going to go ahead and start with the Euro USD. Um, you can look at that dollar index. It looks a little similar, doesn't it? Let's check out this Euro. And, we had this short eventually. It happened. Really wasn't a lot of pips. Overall, the entire day was not, great trading day. Really didn't see much of anything worthwhile other than some sticking moves. And I think that's what we may be dealing with until mid-January. So we'll have to keep that in perspective there. So, I'm still biased short off the red zone. And these areas here, higher lows for the long. So a little bit of going both directions and the opportunity to do that. So moving forward here, taking a look at the pound dollar. You can see here at the top of this, we've got this price action. And triple top, and this really strange move up, and then I shorted it at the very top there, so did not get a lot of pips out of it, but it worked out, and really it came back down and did a fib here at this green zone, and then went back up on this first attempt. So that was a London opportunity at that point. Really with this one, if we go out to the weekly chart, we're still well in the red zone. I think we've got another pullback, and I think a higher low could be significant. We may get a break of that red zone. So, be looking to long the pound, or try to, and use this chart here, your euro pound, to correlate this. Okay, when you're correlating this information, as you see yesterday, this played out really all the way back to support, which, as you can see, this provided a lot more strength to the pound dollar, and you see the euro dollar was weaker. So I think the euro pound is relevant today if the dollar index does not take over. And as we look at the dollar index next, we can see that over the course of the last week or two, 3 weeks, it hasn't been the best gauge to correlate and get into basket entries, has it? Especially the last few days. There's been a lot of really up and down action, and there's been better entries on each pair, such as the pound, the Aussie, and the euro, at very specific price levels that we determine, in these outlooks. So at this point, I think red zone obviously is coming up, and it's around 80.15 on that. And if we look further up, we can see obviously 80.15 to, I think, 80.35 is going to be significant. It's not exactly a head and shoulders scenario technically, but it is a resistance area, and we've got some resistance lines here. I'm now using blue lines to show that and depict that. So the complete top side being up in the 81 area, that's a massive day in the future, right? At this point, I think we still have that opportunity to roll over to the downside on the pair and get that higher low, which will give us some short opportunities. But until then, I think that this is pretty bullish. At least it wants to be bullish, right? It just needs to break this little area, and I think it'll pop up to the red zone and the 200 EMA here on the daily chart, and that'll get you some pips, right, on the other pairs. So I think that and the euro pound will tell a story today, and you'll be able to tell which one is telling a better story by likely 8 or 9 a.m. London. So all right, let's take a look at this Aussie dollar. It's really, the plan has not changed. Short the trend line, and we talked yesterday in the daily outlook to long this area. It looked like a long was going to happen, and sure enough, it did. So it's played out. There's no, if you get into multiple trades within this area, then hopefully you took your pips quickly and kept your stress low. So we're at a red zone. It could short now. I'd like to hit that trend line though one more time. Euro, we're taking a look at the euro yen now, and the euro yen. Look at this. Hit the top of this little area. We're really at a significant level here because we really, once we get through this red zone, if we do, which may not be as significant as it looks on the chart, price could very well just take off to the north side with the euro getting stronger. Now, am I looking to short this? Absolutely not. Absolutely not. Are there places that higher lows will happen and pips are to be made? Yes. And we talked about that yesterday. And what you have here is a really weird pattern on the chart. There's some gaps on my brokers, more than one, but I don't think on all brokers. I'm not sure what happened right there, but obviously, we're at a little fib level now off the top. We could roll over, at this point, but any sort of short on this, don't just leave a big stop and go back, go take a nap. Just set a trailing, set up some parameters and applications you have to dynamically move stops, or just simply move it to break even. Before you head away. I think you'll get an opportunity to do that. It's just a matter of having to wait a little bit further into the Asian session, right? Okay, taking a look at crude oil, the target has been achieved, 92, and we busted up to the 93 level. All forces are telling me to just try to long this again, so we could take a look from the daily, and you can see the 5 EMA overlaps with this previous red zone, now likely going to turn into support. That will be the first place I'll try long, right? Set your alarm right there, about 91.65, and you might have a really good trade going to the north side. As far as shorting this, you can see here on the daily candle, looks like it wants to head down, price action wise short, but I would much rather see it pull back first, take the long, and then if they're at lower highs or double tops of this area with price action, then consider a short opportunity and going with the momentum of NYMEX, not trying to buck any trend here. So NYMEX puts those trends together. All right, let's move forward to the we took a look at that dollar index. And I just want to say that if you look at like this Aussie yen and the euro yen, and then look at the dollar index, and we don't have the USD yen up right now, but really, the correlation of things hasn't been that great from my perspective, at least on the price action side. There's been a lot of entries that have not correlated with the dollar index going in that direction at that time because of that certain pair being strong or weak versus the euro, the odd, or the pound, right? So, just keep that in mind. I think, for the next 2 weeks, that will likely be a driving force. We just need to see what this dollar index decides to do. At this point, you're better off really picking your levels on your pairs, right? And not just trying to use this dollar index to just get into a basket. I think that's not the best idea. Of course, you could make a lot of pips doing it, and it's possible, but not the highest probability looking at it, okay? Let's take a look at the gold chart. And this gold chart is quite interesting. Double bottom long here. Okay, in hindsight, that was great. It got up here, and I was talking about it rolling over, giving us a 4-hour high or low that would turn into a daily price action candle and give us a really great trade, make a lot of money on this gold trade, right? But and really hold this through the year. But at this point, I think a short is looking like the next move. It's got a little price action here at a red zone. It's testing a previous support level, a pretty major one as well. So maybe we'll get the move we want now, get the fib, and then next week get the daily signal to take it to the north side. So now basically things have just stretched out a little bit, and in actuality that gives us a little more room to work with. It might not be the best opportunity to move your stop at the most optimal level, but as I've discussed, you can use a COMEX momentum to get into a break-even trade, and if gold's going to go up for that day and continues up, then likely you will never get stopped out on that. So that's what I'm looking to do, is get into a trade around here, not get stopped out, and just ride the thing all the way through 2013 as much as possible. And there will be a little bit of scaling out, but it won't be anywhere near this level we're at now. It'll be well into the 1700s or 1800s. And just watching momentum, because gold really has no reason to be falling. Okay, no reason at all. It's a buying opportunity, I think, but there is some market action involved with the dollar and the safe haven thing, which I really don't quite understand fundamentally why people are doing that, being that the dollar has issues. But where else do you put it? You put it in gold, put it in silver. Okay, so and other precious metals. That is actually real currency. Bernanke would tell you that gold is not money, gold is not currency. No, gold is not fiat currency, sir. So today just keep a look at this chart and this chart, and as you plan your levels on these other pairs, I think it'll do you great justice to watch the price action at levels on these to correlate with that. And I don't necessarily think you need to draw up zones and everything on these. Or on the euro pound specifically. I think you just need to use it as more of a 15-minute correlation using time of day to get your most opportune entry. Okay, that is the outlook for January the 3rd, 2013.